Hi, everybody. Good morning. If you are on the East Coast, this is the Crazy Man Trading Brief. And we're going to be looking a lot at traditional markets. But yes, Bitcoin has been dropping. Everybody was freaking out at the monthly close. Tone's been doing great videos. But today we have Tyler on, my partner. And Tone is streaming from Österreich. He is in Austria. It looks gorgeous. And let's see what's up because there is a lot of FUD these days. And right now it is dropping. So first I will go to you, Tone. Hey.
Hey, is Bitcoin really dropping? I honestly have not been looking. I was more paying attention to gold.
37.96.
Oh boy.
37.03 on Bitstamp.
Yeah, that's not good. All right, yeah, we'll talk about that. Other than that, yeah, it's my last full day in Austria. We have the carnivory dinner tonight here in Austria, and off to Hong Kong tomorrow. So that'll be fun.
Nice. Well, I have my Buy the Dip shirt on, so we'll see if you guys say that. Probably not. Maybe Tone will. And partner, you have been staying up for Tone streams. You don't sleep. And how are you doing?
I'm doing great. I'm actually talking to a number of clients around the world on this gold and silver situation. So I was up most of the night making sure everybody's understanding what's going on. Bitcoin still doesn't interest me a whole lot. It's just trapped between 4,200 at the top and 3,200 at the bottom. It's now working its way a little lower, but I have no idea what the short or even intermediate term looks like. But a lot going on with the US stock market, with the precious metals markets, with the oil market, with a lot of good things. So we thought this would be a perfect time to get together with Tone and go through some stuff.
Yeah, thanks for having us, Tone. And yes, precious metals, everybody knows I love it. And oil, I'm very excited to look at it. I won't say anything, no spoilers. Tone, which chart are we going to look at first?
All right, let's just go to screen share, and as usual, I have to start with the conference we're all going to be at. Leah, you're going to be moderating a panel. We'll figure out which panel or panels we can have you moderate. Tyler, you are coming as well to understanding Bitcoin. We're going to be tweeting out some cool graphics, and the carnivory dinner registration should be posted sometime in the next 24 hours.
Wait,
so keep
Tone?
that in mind.
Oh.
It will be limited in the number of people that can attend, of course, and it's basically a carnivory / speaker dinner. You're saying something?
Yeah, stop right there. Go see me next to Alex. We are absolutely not legitimate human beings anymore. And Alex, you are fantastic, and I hope that it's okay that I've kind of gone next to you as an illegitimate human being warrior, and your profile picture looks very nice. Thank you to everybody else who has legitimate.
Yeah, give it 24 hours, and it's not going to look like this anymore.
In crypto, we don't adult, I think.
Let me just jump in for a second. I am going to be attending, but the reason I'm attending, I'm not going to be speaking. I'm there to do one thing, and that's to learn. And if you take a look at this list of people, even if you've been around the crypto world for 5 years or 6 years or 7 years or 8 years, you're never going to get the chance to hear the people on the front line having to do with Bitcoin and Bitcoin development. This is it right here. And I wouldn't miss this chance. I'm going to be taking probably 30 pages of notes, just sitting there hour after hour listening to these guys. We had a wonderful conference in Vegas, great speakers. But we talked about a lot of things, including finance and trading, and that's not what this is. This is the guts of what makes Bitcoin special and what projects are being developed and what's in the pipeline and what's already been accomplished. So I'm shocked that this hasn't already sold out. Anybody in Europe has got to be going here. And anyone that can afford it in the US, this is the place to be in early April.
And it's a 5-star hotel, isn't it, Ton?
I think so. I'm not sure. It's not that expensive in Malta, so it's actually not too bad.
It's so cheap.
All right, guys, let's go to the price. I'm quickly gonna. Oh, I want to quickly jump over to, just keep in mind on my calendar, like you can see where I'm traveling to by clicking on calendar, and I'm waiting for, yeah, there it is. So tonight we have a dinner in Vienna, and then this is my workshops. Anyway, and we'll pull up Tyler and Hyperwaves at the end. So here's the long-term view of Bitcoin. I kind of scrapped this together just to show people it's not much different than my long-term view of Bitcoin. I don't want to spend too much time on the long-term view of Bitcoin today. I want to talk more about the short term of Bitcoin real quick, because I am more curious in gold and the S&P, and just to get Tyler's take, because you guys have not been doing a lot of videos lately.
No, we haven't. We've been really busy doing, we're writing a book on Hyperwave with Socrates. Our ETA on that is later in this year, but that's pretty optimistic. There's a lot to cover. We're doing a lot of stuff with Hyperwave webinars. We've got another one we'll talk about coming up in about 2 weeks. It'll be different than the first two because it'll be all about trading using Hyperwaves. So we've just been real busy. We apologize. So thanks, Tone, for giving us the opportunity to spend a little time doing some analysis.
Yeah, so we'll jump on Bitcoin real quick. Today is not a very good day. It looks like we fell about $100 from high to low. The high was at 3806. We still have half a day to go, and the low was already 3670. So we dropped $130 already today. The sequential says you short this thing, but it's not the first time it has done that in the last 7 days. It also told you to short the red 4 under the red 3, and that candle completely reversed into a long wick at the bottom. So Bitcoin has not really been doing all that much. I think it's still in this consolidation phase following the big drop, because the drop was bigger and deeper than even I anticipated. It reached its target of the triangle way too quickly. It never bounced back with any significance. And now we just have to wait for the moving averages to catch up to it. We have not touched the 128-day moving average since October 15th. That's insane. This moving average has been very critical to Bitcoin, and I'm still waiting for that touch. So it's possible we're going to keep consolidating here. I don't think Bitcoin is going to crash this month. I think if anything, it'll crash next month after the moving average catches up a little bit more. That's my daily take. Let me just look at the 12-hour real quick. The 12 hours in a bearish posture, it doesn't look good at all. And I do think it's going lower. You're on a 4 of 9 sequential on a 12-hour. Anything you want to comment on using daily or 4-hour charts, Tyler?
Well, on the daily, I think it's important, or the 12-hour, that this action is now below the big one down red around the 24th of last month. And that's important. What's important to me is that blue line. That's incredible. And you see what's happened. The body of the last 12 hours closed right on the blue line. Now we're struggling. We went below it, but we're right on it again. I think if that blue line gives way, then we take out the blue moving average and probably go all the way down to the green dotted setup line. But I do agree with you. In general, what we're looking at is we're looking at a multi-month consolidation after a 50% drop in price. And the 4,200 level at the top of that range continues to, for me, to be an important area of resistance. And it also happens to now be just about where the orange dotted setup trend line is. So there's a lot of stuff going on. The fact that the moving average is now cut down below that setup trend line is important, because I think that's going to make it harder to get back up to 4,400. And then as it accelerates down, I agree with Tone. The next big move, take a look at Socrates's fractal analysis showing the potential of a very big drop when we get to the apex of whatever this consolidation is. I think he did a good job on that.
All right, here is the 4-hour chart. The 4-hour chart is starting to bottom out a little bit. Those are a couple of long wicks on 3 consecutive candles. The third, the 8th candle is already most of the way over. No matter what happens, you're going to get a 9 candle here. The only way you're not going to get a 9 is if the price rallies all the way to 37.80. So do expect a 9. The moving average was here. I believe in the last video I did, or 2 videos ago now, I think I said once you break this red line, expect a drop down to this moving average. That almost happened. So if you're using the 4-hour chart as your barometer, you may want to consider taking profits on that short trade. The hourly chart hit its 9. Again, this is where you take profits. This is why I like sequential. And you had the big reversal candle on candle number 8. You know the 9's coming, so you need to be out. This long shadow at the bottom of the candle warns you, hey, take your profit off the short trade. If you're a sequential trader, this is that short trade right there. Off the red 2 going below red 1, you could have prematurely jumped into that trade knowing that, hey, once the consolidated bottom is broken, that's an indication that things may accelerate to the downside. You could have even put it right here as well. And this is how you can stagger and lag into a short trade. You can short a little bit. Sorry. You can short a little bit on this red line, add to that position here, maybe even add to that position on a red 2 going below a red 1, and you should be completely out of this trade. Most likely scenario, 1 to 4 candle correction is about to end. Potential acceleration down on the hourly chart, but the 4-hour chart is telling you that the trend is also coming to an end. The 12-hour chart remains bearish, but the 1-hour and the 4-hour could bounce you back up to 37.50. So as a short-term trader, if you haven't already been short and profiting, it's probably not the best time to jump in either side. Just stay on the sidelines. If you've already been short, taking advantage of this $100 move, then you may want to start taking your profit. That's pretty much all I have to say about Bitcoin, unless Tyler has anything else to add. Let's not get into the long-term view on Bitcoin. We'll probably do that in our next video.
Yeah, I really don't have anything else. I know it irritates people when I say I'm not interested, but what I mean by that is I believe we're going much lower, and it's just a matter of time. And the fact that we go up and down and up and down and up and down in a trading range is uninteresting to me. The long-term trend is down. The intermediate trend is down for Bitcoin. And it's just this short-term bouncing back and forth. Some of you can play it. I'm not interested.
All right, cool. I want to skip gold for a minute. We will get back to gold. I want to look at the S&P first. Unfortunately, TradingView has me on a 10-minute delay, which is weird because futures data of the S&P is generally free. Like I can go to other sites like investing.com and look at it in real time, which is weird to me a little bit. Now, I almost want to ignore this 9 on a 10-minute scale, mostly because, it was the opening candle. Oh, no, whoa, I'm sorry. That was the opening. Yeah, it was the opening candle. But I was hoping we'd get a pullback to close the gap. It doesn't look like we're getting that. Well, we're gonna get back to the short-term S&P 500. We're gonna be on with you guys for another 30 minutes. I do want to take a look at how the 10-minute area worked out. So I'm gonna go back to the daily chart. Here's what the daily S&P is telling me. The daily S&P right now is telling me there is an 80% chance we're actually gonna go to a new all-time high this year. And I did not think we would go to a new all-time high this year. I thought it would be next year. But this is incredibly strong action. We hit the 9, we had the 1 to 4 candle correction, we then price flipped, and we are now above or right at the top of this channel. I mean, breaking the top of this channel is so critical. I can't believe how strong the S&P is. But at this point, I really need the S&P to go up to at least 2,900. I really needed a 29. I really needed to get to 29 so that it can then pull back to 28. So ideally, I want 8 more very strong days of the S&P. It doesn't need to close at 29. I just needed to spike. I needed to simply spike up to 29. That creates enough cushion for the most textbook pullback to this enormous support area of 2,800. And if we can pull back to 2,800 and hold it on the way down, then I can see breaking 3,000 this year. Tyler, your views on the daily before we look at the weekly scale.
Yeah, I agree completely. This has been one of the largest moves in a short period of time over the last 20 years, going all the way back into the early 2000s. Now, it came from a deeply oversold position. Most people were on the left side of the boat thinking this was going to continue to go down, and therefore you had this violent reaction to the upside. We took off our inverse funds against our equity positions at the end of the second week in December, and we've held those equity positions long, about 50% ever since. Now, I did not think that we would hold it throughout all of January. I sure didn't think we would hold it throughout all of February. I, in my wildest imagination, didn't think we'd still be holding it in December, but we are. I have not added to this position, approximately 50% long and 50% in cash. I am not going to add to it here because of what Tone just said. We're very close to breaking to the upside. That's different than breaking to the upside, particularly when you're sitting on tremendous overhead resistance. Both Tone and I have said that between 2,600 and 2,800 to 2,850, there was tremendous resistance. Well, we're at the top of that right now. And as you can see on the weekly, we're on an 8 green. And what that basically means is something is going to have to happen right in here. And depending on what that is, Consensio has got you 100% long, and I am going against my own trading system by not going along with that, because Consensio doesn't consider things like overhead resistance or support. And just as Tone uses various things like triangles along with his sequential doesn't take that into account. It just gives you the numbers because it's a timing tool. So then you've got to overlay other things. I'm overlaying things on top of Consensio, both in the gold market and in the S&P. So I agree exactly with Tone. I'm waiting to see. I'm not ready to pull the trigger to go 100% long. It very well might be that we end up 100% in cash, depending on what happens over the next couple of weeks.
Yeah, no, that was very well said, Tyler. I actually want to adjust my channel because I want to hit these 9s. I mean, these were awesome nines. And if I adjust my channel a little bit, I had my channel covering, I mean, nothing is ever perfect, right? And I have two choices for the channel here. And both of them are decent options. This is the weekly scale. And I can either, have it the way I had it before, which is covering these tops, basically, in which case we are right at resistance of the channel. The other option is to lower it to the early tops of 2010 and 2011. That means that in 2014 and 15, we went above the channel a little bit and dropped down to the bottom of the channel. But by doing this and then zooming in, it means that the original drop in early 2018 was perfectly supported by the top of that channel, which I didn't notice before, but I do now, okay? And that also means that we have broken through the channel once again. And this is honestly unprecedented. I mean, just let me zoom out to the last 10 years of the S&P 500. We have not had a rise. Even the rise from the crash of the 2008 did not go up this fast to the top of the channel. This is insane.
Well, and it shows you what happens at the end of a 10-year bull market, meaning that there's tremendous cross currents. I love this chart because every time you get to the top of the channel and you challenge that top, what results from that challenge is a drop back down to the bottom of the channel. Now, you can go for a year or 2 years slightly above it, but you don't get crazy above it. And then you go all the way back down to the bottom of the channel, like in 2016, going into 2017. But take a look at the action from early 2018. Look how far above the channel we got. That is over enthusiasm, just as with things like Bitcoin, you went to unreasonable levels. Now, in that case, you only pulled back down to the top of the channel, went back up about the same distance, even though it went higher because the channel's going higher. It's about the same distance above the top of the channel. And what happened? It collapsed all the way back down to the bottom of the channel. That tells me that that channel is perfectly drawn, even though you can argue, at various times it could have been changed. There's no reason to change it, I think. I would love to see a drop back to the top of the channel and then a movement back up, because take a look at where the consensio lines are all lining up right at the top of the channel. If we can pull back there and then begin moving up, I'm 100% into the market.
Right, and I would love to see a blow off top right here over the next 2 weeks into 2,900, because that would align the weekly chart and the daily chart. Now, the daily chart, I'm using the futures. The daily chart is going to be very challenging for the daily chart to get to a sequential 13. You literally need every day to be an up day, and then you're still going to fall a couple of days short because there's only 5 trading days in a week. But if we can stretch the bull market for 2.5 weeks, if we can stretch it into, let's say, 12 more days of straight up upside, that would be like a perfect combination of a potential, TD9, another 9 on a daily, a 13 on a daily, and a perfect 9 with a reversal candle on a weekly. And I would love to see this go up just a smidge higher, even like 2850, 2860, to set up a nice orderly pullback towards the consensio lines, the moving average lines, and the top of the channel. And I am super bullish the S&P 500, but I'm also very cautious here. This is the time to take some of those profits, but at first sign of weakness. Until you see weakness, assume the S&P is going to 5,000 tomorrow.
I'm going to throw a little curve in here. I'm going to talk some fundamentals because what often happens is all the fundamentals in my mind are always in the price. So price comes first for me. But I become very interested in what got technical moves into a current position on a fundamental basis. And what I would argue is that this run up was, number one, from a deeply oversold position that went too far to the downside. Number two, the possibility that certain things were going to work out in terms of the Trump administration, the Mueller report, the trade with China, and all of the dispute over what's going to happen with the border, which was a secondary question to a bigger question, which had to do with the budget. Are we going to go into another crisis with our budget? Now, as you got higher and higher, each of those four things slowly became resolved. And as we sit here at this critical point for the US stock market, we are days or hours away from the Mueller report either going public or not being allowed to go public. We are days or hours away from a resolution with China trade. And don't underestimate how big that is relative to world expectations about it collapsing or being successful. And finally, it appears that we don't have to worry about the budget situation anymore in the US because enough concessions were given having to do with the whole question about the wall and the border that it looks like that's going to be funded one way or the other. Now, let's take the opposite of all those things, which in the next 60 minutes could change. I would very likely see that we hit a 9 on the S&P weekly. We drop below the upper pink line of the channel. We drop below all three of those moving averages, and we at least go down and test that blue line, which is the beginning of the zone that Tone and I have been talking about between 2,600 and 28 or 2850. So this is a coin flip for me. And the reason I'm 50% in, 50% out, my foot's halfway in the door, but I'm ready to turn around and run the other way, is because the fundamentals and the technicals, as they almost always do, are in alignment at a critical point.
Oh, lost Tyler's audio.
Am I back?
Yep, you're back.
Okay, good. I was finished with my rant.
So I'm going to jump in real quick because I see some comments. And okay, so people have to understand that the markets have a way of making people make terrible decisions. No one believed that the S&P can do this. Very few people believe that the S&P can do this, right? And we're not talking about people that only talk about the markets going up and only talk about the markets going down. But like, this is what can happen with Bitcoin. Bitcoin can rebound so fast, you will be too late to buy it, okay? And we don't know how Bitcoin is going to bottom. It could bottom even faster and go up even faster than S&P just did. Because over here at the bottom of the S&P, the majority of the people were expecting it to go to zero. Very few people expecting it to bounce. I did, Tyler did, very few others did, okay, for technical reasons. I will add that I honestly think that, like, I recently heard, I haven't had time to pay attention to the fundamentals, but I recently heard that Trump is going to meet with Kim Jong, which one is it again?
Okay,
Leah?
Can I jump in?
Oh.
He already did that
He did.
in Hanoi. So that was in Vietnam. You could have maybe went and said hi. And can I say one thing when you're done about fundamentals on this? It's a question to you guys.
Okay, let me just say it real quick. I think that Trump meeting with Kim Jong-un, is it?
Yes.
That.
The sun.
That's the son. No, I know, but Kim Jong-un is the son, right?
Yeah,
Okay.
you're good.
So I think Trump meeting with Kim Jong-un is a huge bullish sign for the markets. It shows that, you know, people are cooperating and the world is a little more peaceful. Now, granted, India and Pakistan got into a bit of a beef while I was there, unfortunately, but I think that's going to get resolved as well. I do believe that the world is becoming more peaceful over time. I do believe that I don't think North Korea is going to do anything to any country. And I think eventually it'll probably merge with South Korea. And I think these are very good signs that help the global economy overall. Now, the other comment I want to make real quick before Leah asks the question, you know, people are saying in the comments, you know, because they don't believe that the economy is doing okay. They think it's all smoke and mirrors. They're like, the middle class is getting decimated. My question to you is this. If the middle class is getting decimated, I don't know where you live, but if you live in a developed country, I'm here in Austria. Austria has no people. It's the opposite of where I just came from, which is India, which has too many people, okay? Austria has no people. On Friday night, with 3 hours before 8 p.m., we wanted to go to a nice restaurant. We called 4 restaurants at 5 p.m., and none of them could get us a table for 4 people, okay? So if you think that the middle class is getting decimated, please go call the top 10 restaurants with 3 hours at 5 p.m. and see if you can get a table at 8 p.m. in whatever city you live, and then try to answer your own question.
Yeah. Oh, yeah.
Tyler, quick thought on what I just said, and then we'll have Leah jump in.
Yeah, it's very easy to draw broad conclusions from a small sampling of evidence, but the huge amount of evidence that shows that things keep getting better and better, not worse and worse. I go back to a very important book. A lot of people disagree with me, but it's called The Better Angels of Our Nature. And it's not talking about the last 20 years. It's talking about the last 100,000 years. Things keep getting better and better and better. Every portion, every part of society is better off today than it was 50 years ago, 100 years ago, 200 years ago, at all levels of education, all levels of healthcare, all levels of access to technology and to information and to data. Now, you can find all of the examples that haven't gotten good enough yet. That's a different question. So the point is that 100,000, Tone says 75,000. I always like to outdo Tone. I'm saying 100,000. I've been saying 100,000 on the Dow for the last 10 years in my lifetime, and I'm 70 years old. I fully believe that, but not because of anything I can point to today in the economy, but because what I can point to in this chart that Tone just brought up. This is the fact. Don't get caught with the sprinkles or the icing. Look at the cake. The cake is that for the last 250 years, a new government structure came along that provides freedom to the extent that it has never been known in world history before, and that is the US and the US Constitution. And over time, that freedom allows individuals to go from the lowest levels of the economic strata up to the next level and the next level and the next level. No other government in history has been able to provide that. Now, are we pretty screwed up today? Absolutely. You take a look at what's going on in Washington, you've got to throw up your hands. The fact that our legislators, the congressmen who pass the laws, have a acceptance level, an approval level of 11%. There are child molesters in the world that have approval levels much greater than our Congress. These are a bunch of clowns, and they've been there for 30 and 40 years. But that has nothing to do with the big picture. What you're looking at is the template of what this all means for the world, what this means for the US, and it continues up till today.
All right, Leah, let me, I have other things to say because I'm looking at the comments, even though I shouldn't. You want to jump in with what you wanted to ask us? I do want to move on to oil and gold, and it's really important, and we only have about 15 minutes left.
It's okay.
Go ahead.
No, I know you're excited, so I'm not going to stop the tone train.
Oh, you had a question. Go.
Sure. If I could just make a comment on, I'll go really quick because I know you're very excited. One, you did mention the summit. I am here in Washington, so I hear way too many politics. So it didn't go very well, but UN said that they'd meet again. So at least that's something. Just Tyler went on a rant regarding my background. So that's like not fair, Tyler, because you get me really excited for the World Bank. Absolutely, the world is much more developed. Obviously, we have lots of problems in the United States of America, but everybody points to the World Bank as the most corrupt thing ever. But people are forgetting that it's not just the World Bank with power. I mean, developing banks all around the world. Chinese Development Bank, I'd say, is even more powerful than the World Bank, and it's very corrupt. But at the same time, they focus on building infrastructure. World Bank, everybody needs to remember, has a mandate that they cannot be involved in politics. What that means is that specifically if they're giving a lot of aid, they can't, and it's to a dictator, they can't say that they're not going to give that aid because that it's a dictatorial government. They still have to do it because taking that stance and taking it off means that they are taking a political take. So what has happened is people in these countries have said, the World Bank, we don't like you. They have then embraced other development banks from around the world. Let's not forget that the BRICS were a big thing and they have continued to develop. Now Tone is giving me that look, so I'll stop. Okay, no, it's okay, I'll stop. So my question to you guys, I'll rant on our show, don't worry, sorry, I got excited. Okay, and that I technically my degree is economics. So, and international political economy specifically. Okay, so what I was gonna ask you guys, because then you guys were talking about something I was excited about, which is all-time highs. And yes, the live chat was excited, so it shows I'm listening, and I do have all your questions in the live chat. So if we talk about potential all-time highs, people were asking, are you still bearish? Are you still bullish? You guys did answer those, I think, very correctly. Now, here's my specific market question, and I'll throw it to you, Tone. My question would be, and this is personal, but I would say that equities are priced relatively large trade discounts right now, and that potentially, right, the probability of a near-term resolution is rising when we're talking about China and the United States. That's huge news, potentially why futures last night in the S&P are doing so great, and also different things. It's affecting, oil and everything. But even if like these models, overstates the discounted pricing into equities, there could be more room for equities to rise on further reduction in tensions, again, in China and, the United States, as well as around the world. But China and the United States are the two biggest economies in the world. So, do you think, and you did talk a little bit, but I think just maybe one more comment of if these trade, issues and tariffs and as we've called it for a while, trade war, and yeah, this also in light of what you said that Trump is attacking Powell right now about the strengthening of the dollar, but he is easing on China. So do you think that maybe just as the tariffs are lifted immediately or over a period of time that this will allow the United States to monitor whether China is meeting its obligations, and therefore potentially that prices in that we are still seeing a discount in equities?
I do think there is a discount in equities, but not because of all of these, macroeconomic political things. I think there is a discount in equities is because private companies continue to innovate. I think robots are coming and they're gonna make life a lot easier for people. and the companies that are going to build these robots are going to really drive the stock market to another level. So those are the reasons. Like, I think Amazon, I don't know, like I saw your whole hyperwave thing, and like I believe that Netflix is in danger of actually being in a hyperwave and going all the way down, because I think Netflix model can be disrupted. But I just can't believe that it'll happen to Amazon or Google. I find it hard to believe. And I think companies like Amazon and like even Tesla and God knows what else is on the horizon that's gonna, replace truck driving, that's gonna replace, like, automate so much stuff, eliminate so many jobs. And I think that's the boom that is still to come. And I think the robotics boom, yeah, it's gonna create some massive unrest. A lot of people will go unemployed. But I think as people are going unemployed, the companies that are making those people unemployed, their equity price of those companies is going to shoot the S&P through the roof. Now, I do agree with people that, well, not necessarily agree. The U.S. debt is 20 trillion. Is that a problem? My answer is no, it's not a problem, because no one is coming to America with their guns to collect. America has more guns. So it's irrelevant how big the U.S. debt is. The U.S. unfunded liabilities are a big problem. Like, owing the debt to your people could be an issue, because now it's internal problems. But again, I do think technology is going to come a long way. I do think that, like medicine and like a lot of that technology, I think, health, I think people are going to hopefully start eating better. And I think the people are being way more conscious about their health. I think that's going to go a long way. I mean, a lot of people are quitting smoking now, at least a lot more. So I think those are the things that are going to drive the market to the next level. And do I see a giant crash coming, like the replica of the Great Depression? Of course I do. But before that happens, the market needs to go up towards 100K. It has to get way outside this channel. It has to go exponentially higher. Now, the other thing that Tyler mentioned, Trump is upset at Powell over the strength of the dollar. That bothers me a lot, because the dollar is not really strengthening all that much. And if Trump is upset now at the strength of the dollar, he's going to blow a gasket in about 2 years. When the strength of the dollar rises 20 to 30%, like I've already been expecting. And I don't understand why Trump is upset about that. I don't think he should be. He should let the free market deal with the rise of the dollar. Trump trying to prevent the rise of the dollar could cause some serious issues. So that part worries me. Tyler?
Yeah. All of Leah's comments and Tone's comments, I think, are really interesting. I wish we had another hour to go. I just want to say a couple of real quick things, though. I'm apologizing for not getting Leah and my next article out on the gold standard as a possible solution to world debt. I agree with Tone. U.S. debt is not the problem. World debt is the problem, and it demands a solution, and we are going to get a solution. And I said there were 5 solutions. One of them was Bitcoin, one is gold, one is default on the debt, one is growing out of the problem, which is getting more and more a possibility if we can get the U.S. market back on track to the upside into new highs. That will give us a 1 to 2 year window, which will then possibly give another 4 years of economic policies under Trump to actually help the world grow out of the problem. I think that's the least likely of the various solutions. But I am now about finished with my second article, which is a change. I think the most likely and the best solution to the world debt problem is a gold Bitcoin standard, with gold trading around $15,000 an ounce and Bitcoin trading at 5 million, not 10 million. At those levels, that equals about $220 trillion of new value in these two asset classes. But what it also does is it gives half the world the ability to participate in half of the solution, the Bitcoin half. They won't be able to participate in the gold solution because it'll get pegged at about $15,000 an ounce, and that could occur literally overnight. Bitcoin you can't peg, but Bitcoin can quickly take its position. So look forward to that article coming out in the next week or so if we can get a lot of other things done. But great discussion.
Hey, Tyler, we are going to move on to gold. I'll briefly say, I think it's impossible to grow out of the problem. Even if I underestimate how good the equity markets are going to be with this, automation and robotics revolution. Having said that, the damage of the debt is beyond repair because I think interest rates are going to rise. 70% of the debt is accumulated interest over time. Now, that's only going to get worse. I don't see us growing out of the debt. I see the US debt going from 20 trillion to 100 trillion, right? The question is, eventually it's all going to come crashing down. I think it's impossible to grow out of the debt because there's only been, 1 or 2 years of surplus in the last 20 years. And if there's another 1 or 2 years of a surplus, it only means that government is allowed to print more money. So
there's only been two small surpluses in the last 50 years, 50 years since 1960. I completely agree with everything Tone just said. That's the least likely. That would be the best solution, but that's not going to happen. So we've got to keep our minds open for what practically could be done short of default, because default, everybody is going to be hurt.
Yeah, so, okay, I'm sorry, damn. There's a really good question in the chat, and it says, how many people will lose their jobs to robots? The answer is probably 80% of the world. But guys, I just came from India. I mean, there was like the last day I was in India, I was in a really nice part of town. Other than that, it's literally like a landfill. There's just garbage everywhere. And so many people are unemployed. Like, I can't wait for robots to go to India so that they're actually picking up this garbage and solving the garbage problem, right? Robots fixing houses so that like the infrastructure isn't collapsing, fixing the bridges. Like, these are the kinds of jobs that robots are going to be doing. And yes, they're going to remove a lot of high-paying jobs that people should not be doing. Now, again, now I'm in a country like Austria where the population rate has to be like virtually negative, right? And the infrastructure is going to be collapsing. This is one of the reasons why Europe, is opening up to all of these Middle Eastern immigrants, because their birth rates are so low. Like, yes, people are going to lose their jobs, but all developed countries, they start to have declining birth rates because you don't need so many children. So I think like the world, people that are scared of world overpopulation that yell at me for wearing carnivory shirts, the problems are going to solve themselves, guys. Anyway, let's move on to gold.
Be careful on that topic because you'll get Tyler talking forever, who is obsessed with Ray Kurzweil and the Age of the Spiritual Machine. So go quickly on to the next topic.
Okay. Wow, I actually wanted to spend the majority of the time on gold, and that's not going to happen. So Tyler, this is, the weekly chart of gold. It was frustrating for me personally because I really expected the huge drop, coming a few weeks earlier. When it didn't come and gold started rising, and like I had to turn bullish on gold but I was always borderline cautious. And once I saw the shooting star candle and last week trading below that shooting star at 13.25, you had to get out of the market, out of gold. So at what price did you get out of gold? I'm curious.
Yeah, we actually got out in the morning of Friday. As the daily candle was coming down, and that was based on the 9 weekly that had already occurred, and then the 3 running out of gas. So on the Friday drop, as we were beginning to come down, we got out of all of our positions. Now, when I say all, we only had 10% into gold, 5% in GLD, 5% in GDX, which are ETFs that you can trade all day long. One of the reasons I use ETFs is when I want to get out, I don't have to wait until the end of the day the way you do on a mutual fund. There's some great mutual funds that I've owned in the past in the gold market. But then anybody that was actually in bullion, it was a fairly easy trade unless they were in Europe and had already closed long before we closed in the United States. So I got out on Friday. We did have a small profit because we bought the breakout of that red overhead trend line. Anything above 1280 to 1300, I thought was a good place to get in. And we did that. So by the time we got out, we ended up with a little bit of a profit. It was a wasted trade, but whenever you've got a little bit of a profit, that's okay. What I'm looking for now, if you take a look at this daily, a lot of bad things are about to happen. And what I mean by that is the short-term moving average is ready to cut through the intermediate. That's still a bullish position for Consensio, but it's not one I'm willing to take because of what the weekly was saying. If you don't mind just jumping back quickly to the weekly, I'll just take 30 seconds. On the weekly, this pullback, if it can stop at that brownish colored downtrend line, which I don't expect, I think we're going to break through that and come down into the moving averages. At least that's what the probability is saying. And I think that the red 9 was an accurate top, even though, just as Tone said, it took 3 weeks and a head fake on the green 3 to finally put in the final top. But that head fake on the green 3 is a very important candle because of the size of the wick and where we closed. And then at the beginning of the next week, the red 1, we barely got above that body and began collapsing right through the short-term moving average. So I have gotten so negative that I simply pulled the plug, and I can't tell you right now where I think it's going. I have no idea. I have no idea if this is going to hold these moving averages, get back above that brown trend line, and get up to 1380. I was hoping we could get over 1380 gold. 1400 would be better, but I would take 1380, and I would take big positions in gold for the long trend if we could get up there. We didn't. We've stalled out, and now it's too early to say if we are beginning a big downtrend. But the risk is there that we are beginning a big downtrend, and everything above that brown trend line is a bull trap, which Tone has talked about. That could very well be what we have just seen, in which case we could go all the way down to the green line.
Hey, Tyler.
Yeah.
It continues to bother me that gold never back tested the 1980 high. Does it bother you? And do you think gold has a greater than 50% chance to go under $1,000?
Yes, I do believe there's greater than an 80% chance we get below 1,000. However,
greater than an 80% chance?
Yes. Greater than an 80%
I didn't
chance that we're going to go below 1,000.
I didn't think you'd be more bearish than me. Sorry, go on.
Well, that's only because of the recent action. We tried to get back up to 1380 for the 4th time. And this time we actually got above that downtrend line that you had drawn, and we stayed above it for a month. That was all gold needed to run up and take out the 1380 top, and it did not do it as of 72 hours ago. This is a very important reversal, but that reversal does not mean that we are in a bear trend yet. It simply increases the probability that we are. Now, the question of when and if we get below 1,000, I'm not saying we have an 80% chance of dropping to below 1,000 right now. I'm saying there's better than an 80% chance we are going to go below 1,000. It might be right now. It might be after we run back to that 1045, 1046 area, which was the peak back in 2008. I don't think we need to get down to the peak back in 2006. If we get back to the peak in 2008, which we've already tested once, we could find support there, go back up, and then stall out again and come back down another time. So there's a lot of potential scenarios here. And what I'm saying is everybody needs to understand all of the options. Don't pick one of them and dictate it to the market. Let the market tell you when to get in and when to get out.
So would you say gold was in a hyperwave?
Yeah, I actually would, but it's kind of sloppy. Everybody can see the 1992 to 2004 sort of sideways movement. Pick a place you want to put your phase one. It doesn't matter to me. What I look at is horizontal movement for a long period of time. Off of that line, wherever you want to draw it down there, you clearly see this move from 2000 to 2006. 4 years is good for a phase two. Then you get kind of a sloppy phase three, and I like the way you've got it drawn in. Normally you would draw it to the first major correction, but the A13, the aggressive 13, looks as good as any as a significant pullback. And that could...
Okay, so this is the minor exception, right? I think there's two things going on here. First of all, the A13 area was a beautiful pullback to this exponential rise that took place in 2006. Also, I think that this big drop from over 1,000 down to 700, this coincided with the 2008 bear market, the financial crash. And this was actually what, in hindsight, convinced me why gold bugs are wrong, that gold will not skyrocket during a giant economic collapse. Because when everybody loses their jobs, the last thing they do is run out and buy gold. They sell the gold that they have, even if it's in their teeth, in order to buy food.
That's exactly right. But what's interesting with all this hyperwave stuff is from that point, which if we consider that a phase three, the price of gold basically went up 250% up to the all-time high of 1923. Now, that was as big of a move as we saw in the stock market. So that's a very significant move. And we could argue now that it was too much, too far, too fast. The dollar did not correspond inversely to that move, except for short periods of time. And then you had a phase 5 crash that basically took you from 1900 all the way down into the 1500 level, which is a fairly significant drop. You had a snapback that took you up to 1700 and some odd, and we've been going down ever since. Now, the reason I'm not jumping all over this from a hyperwave point of view is because the 7 is now gone on for approximately 6 years. We've seen other hyperwaves where that's happened. I've said that phase 7s, you have to keep moving to the right of your chart because they're maniacal.
It's been 8 years.
8 years, which is just, unbelievable. So I was hoping that this last move up from the 1100 level could get above 1380. If you just pull back a little bit and show everybody that 1380 mark, that was a huge, important, significant overhead resistance. And if we could have gotten above that, I would have thrown in the towel and I would have said, we've got a funky hyperwave here which doesn't have to go all the way back down to the beginning. I'm afraid to tell you what the all the way back down to the beginning is. It's not below 1,000. It's about $300. And I'm not willing to make those kind of calls because this is setting up to break down right here, right now. And then we've got to see how far it goes. If it can hold 1,100 or 1040, then we're still in this sideways consolidation. And it's too early to tell if this is a funky hyperwave or we've actually broken down and we're in a phase 7 of a hyperwave that it's going to take us all the way back down to $300. So lots of things to talk about.
All right, let's quickly, I haven't looked at an oil chart in forever, actually. So I want to quickly put in oil. We're already over time. But I want to look at the weekly oil. And I want to see, I haven't looked at this since the last time Leah was on this show.
Markets are pretty tight.
Oh, so oil is on a weekly 9, and it's about to get squeezed between the moving averages, and we'll see where it goes from there. I did say that once oil broke out, I didn't think once oil broke out, I did say it had a chance to go up to 60. Let's see what this weekly 9 brings us. I think oil is getting toppy right here. Not a trade. Unfortunately, this isn't a tradable top. If this 8 candle was in the opposite direction to the upside, followed by a red 9 candle, I would say absolutely short oil. Unfortunately, this consolidation at the top is setting up for one more push to 60, but then your sequential is going to be out of whack. So unfortunately, I would stay away from oil at this point in time from a TA perspective, but we can go over to Leah for a fundamental take.
Let me just throw one technical thing, then I'll throw it over to Leah. Look at the Consensio chart. You've got the intermediate going down. You've got the long-term going down. You've got the intermediate cutting below the long-term. The only thing you've got supporting price is the short-term, and it's done a good job of that on this upside. When you get a short-term move where price is above the short-term in Consensio, if you've got X to spend on oil, you've only got 5 or 10% of X in this market. You're 80 or 90% out of this market, and I think that's the proper place to be. Here on a shorter term time frame on the daily, you can see that we do have a bullish configuration where the short term, intermediate term, and long term have all turned up. But now on the longer term time frame with a 9 on the weekly, you've got to question this short term trading. Short term traders could be fully in with 100x or X in this trade because of Consensio, but be very careful because that daily can break down very quickly.
Okay, you're looking at me. I think that there's not too much. I completely agree with you, Tone. I'm still bullish, but I mean, I would not do all that much right now. I agree with you. I think markets are pretty tight. I think there's spare capacity is tight. And with Iran and Venezuela, heavy sour crude markets are just really, really tight. I mean, I think U.S. growth is coming a lot into this play. Growth is coming in a bit lower than expectations, despite what all the news and Trump is saying. But, in my opinion, I don't see any reason to be bearish at these levels. I wouldn't be trading it here just as what you're saying, because it looks, but it does, I think, look pretty fairly valued. But that's all I'd say. We just have to watch. But
all right. Were there any good questions from the live chat we can very quickly answer? I saw something about NVIDIA, but I thought I took a look at NVIDIA the other day. I didn't see anything there. I'll glance at it again if it loads.
Do NVIDIA, and you'll see why. It rallied big time, but also because that my background is in Japanese equities when it came to Wall Street, and SoftBank has been playing, and they are big market movers. So NVIDIA is a good one to bring up right now. Plus, obviously, because of chips. I'll stop speaking.
Okay, so well, it's not loading, so I don't know what's going on. I mean, I can always change like one of the other tickers, though I just don't want to because I'm gonna forget to change it back. Not sure why it's taking forever. All right, any other questions real quick while it loads? Oh, here we go.
Yeah, okay.
Come on. Yeah, I'm also like rendering a video of the workshop. Had to do some editing, and that's definitely chewing up a lot of memory on my computer right now. NVIDIA, it should be in here somewhere.
Yeah, NVIDIA's dropped from 300 down to 150. And this could be just a phase 2 of a hyperwave with
It
this.
could be, but I don't like it. Like it's not exactly breaking out the way the S&P did, right?
Yeah.
So that was a big correction. It got supported by a moving average, but now I'd rather see it squeeze between the two moving averages, creep up above it, and then bust out to the next moving average. I don't like it here. The sequential is not giving you a trade here. It continues to price flip. I would, I mean, it had earnings, and that earnings was not very positive. It just had earnings last week. I can look at the daily chart, so I don't know why people are excited about NVIDIA. Here is the earnings. It looks pretty disappointing. Now, it didn't really drop. The daily chart is somewhat being supported, but I would say there is a high probability that NVIDIA could close that gap. But if I was a swing trader, I would only buy NVIDIA on a, I'll forget this candle. So I would buy NVIDIA by creating a best fit line here. And if we can close above this line, I would then and only then be interested in NVIDIA. That line is at $163.25. And if we can get above that line with some positive volume, look, there's no volume here, right? Or there's no positive volume spikes. The only positive volume spike is on this candle, and this damn volume spike should be red because the damn thing dropped like 5-6%, right?
Right.
So it's really not a positive volume spike. That's a red volume spike. That's just terrible, like the way volume is displayed. So until I see some significant volume coming in and above this green line, I would stay away from NVIDIA, buying it at above 163, looking for 200, and then reevaluate is a potential play on a daily scale.
Yep, I agree. You've got a cup and handle, you've got an inverse head and shoulders, and you've got the short term crossing above the intermediate term, which is both moving up. So as long as price stays above that short term moving average and gets squeezed below Tone's trend line, it should build up some pressure. Enough to break through, I don't know, because the long term moving average is way up there. And I think this depends on the stock market. If the stock market breaks to the upside and begins to move, then this will probably break to the upside also.
Yeah, I mean, you can almost start drawing your ascending triangle as well here. You know, it's not going to look great. Let me get this. Why isn't it going down? You know, oh, that's why, because I have the magnet on. So it's not a great triangle, but it's not perfect, but it's the best you got. And it does have signs of a breakout, but you got to wait for the breakout.
Yeah.
Can I add some news?
Mm-hmm.
And then we'll stop. So what'll be interesting is, to your point, is just watching it. Because what SoftBank has been saying, and I don't think it's priced in quite yet, is that they're going to buy back as much as 600 billion yen, which comes out to like $5 billion of the stock. Now, buybacks, as we very well know, are not always a good sign because they can be a defensive tactic. But typically when SoftBank gets involved with buybacks, at least you can do like a merger, you know, like an arbitrage situation where there should be some shareholder, you know, and share price gains. But, you know, so Sun stepped up, and that's the founder, right? And he said that, you know, obviously he thinks that they're going to try to close this valuation gap, that, you know, he thinks it's worth, you know, more than its market value. But also what's interesting is that the proceeds from the IPO of its telecom business in December, so like SoftBank owns, you know, so many things. They even, you know, owned Alibaba when Alibaba went, you know, IPO, and the New York Stock Exchange, which was kind of interesting. But that's what's going to be used to fund the repurchase. And that's actually the biggest ever buyback that SoftBank has ever done. So the shares rose in late trading, but you are correct. So I think that at least right now, from at least like a fundamentals prior, you know, being priced in, I you know, you guys are the TA maestros, but I think it'll be an interesting one to keep watching.
Very good.
All right, cool. I wanted to just glance at where the S&P 500 is. It hasn't really changed. We're kind of flat at the open. So I was wondering if it, you know, shut up or shut down. It didn't do either. I think it's time we get going. I do have to run. I have a carnivory dinner to attend. And don't forget, guys, please join us at Understanding Bitcoin. Leah and Tyler will both be there. It's going to be an awesome conference taking place in Malta. I'll just close out on that note. And please check out Lucid Investment Strategies. And
Thanks.
You guys have your webinars quite often. Again, my computer is lying because I'm burning a video, editing a video, but it will load. There it is. So please check out Lucid Investments, which is Leah and Tyler's site. You can go to products. You can check out their workshops. You can check out their webinars. I will eventually be going to a webinar model because sooner or later I won't be able to travel the way I do. Another Hyperwave webinar is coming up, and it will be, oh wait, that's the one that's completed.
In about 2 weeks.
Part 2.
Yeah, we'll get it up there. It's going to be trading hyperwaves using Consensio and a lot of other techniques. So it'll be part 2. Anybody that's attended either the first 2 workshops or the webinar will have a huge discount on this next one.
But what's really cool is like how to even day trade it, swing trade it, position trade off of Hyperwave, not just long-term investing. So it'll be really cool. Oh, you put us on big
Great.
stream. Okay.
Thank you, Tom.
Bye, Tom. Thanks. Have fun at Carnivory.
Very cool, guys. Thank you for joining me. I got to run. We'll do this again, hopefully in a week or so. It was great to catch up on our thoughts of the markets. Later, guys.
See you in Malta.
Bye-bye.